Hello, everybody, and welcome to today's live webinar training brought to you by the Sovereign Business Hub in Bahrain. These trainings are a regular part of the benefits that we offer as part of our business incubator. So we're glad to be able to introduce you to our speaker today. Mohammed Amr is our assistant manager for our client accounting team, who will be covering how to effectively manage companies' annual accounts in Bahrain. Amr, over to you.
Thanks, Bianca. Good morning, everyone, and thank you for joining us today. I'm delighted to welcome you all to this webinar on how to effectively manage Bahrain companies' annual accounts. So, as Bianca mentioned, just quick introduction of myself. My name is Mohammed Amir. I'm the Assistant Manager Client Accounting at Sovereign BPG, specializing in accounting, financial compliance at Sovereign Group. So, whether you are a business owner or a finance professional, uh, basically simply exploring opportunities in the region. This session is basically designed to provide you with the valuable insights into accounting, audit, and tax landscape in Bahrain. So we will be covering key areas such as compliance requirements, starting from bookkeeping, financial compliance, financial reporting, audit, tax compliance, budgeting, and financial planning. So our goal is basically to help you understand not only regulatory obligations, but the importance of how sound accounting practices can help you in maintaining sustainable business growth. So I'll also explain about the webinar flow. So I'll be starting off with presenting certain slides, which I will walk you through the key topics. For example, budgeting, tax compliance, audit, bookkeeping, accounting, tax obligations, specifically related to Bahrain. So once we cover the content, we'll open the floor for Q&A session. That will be your opportunity to ask any questions that you have. So feel free to note down any points as we go along. So once the slides have been finished, feel free to ask any question. I'll be more than happy to answer all of them one by one. So starting with the first slide that I have, which is related to the bookkeeping and the importance of the bookkeeping. So let me just move on to the next slide. So yeah, so bookkeeping is basically maintaining all your financial transactions in a proper accounting system. It's basically tracking of all your business transactions in terms of whatever are your sales, whatever are your expenses, whatever were your bank transactions, payroll, or anything related to your financial business transaction, that should be properly maintained in an accounting system. It would not only help you to track the business performance, but it would also help you to navigate your spending, to understand if your sales are growing, to understand whether your expenses are enough to meet the requirements to generate the revenue, or maybe you are overspending. So all of these can be ascertained by maintaining proper books of accounts. So yeah, it's basically maintaining or keeping track of all of your business transactions. So mainly as per international financial reporting standards, the books are basically being maintained on accrual basis. Some of the companies do follow cash basis of accounting, which is not recommended. So as per IFRS, the main way of maintaining books of accounts is the accrual base of accounting. So when talking about the financial reports, mainly it consists of the profit and loss statement, balance sheet, and cash flow statement. I'll go through these reports individually in our next slides. But yeah, the bookkeeping and maintaining proper records is one of the key requirements as per the Bahrain Commercial Companies Law as well. So it is very important to ensure that the books are being prepared properly and maintained, which should show the true and fair financial position of the company. Next up, I've put together a standard International Financial Reporting Standard compliance profit and loss and balance sheet. So as you can see, as a standard template, a profit and loss statement have the sales and the revenue on the top, and then cost of sales is being deducted to get to the gross profit figure. And then we have some operating expenses. After deduction of the operating expenses, we got the operating profit, which is earning before interest, tax, depreciation, and amortization. So that we call it as an operating profit. And then after that, if there is any interest, income or expenses, any depreciation or anything, after deduction of that, we reach to the net profit. So technically, in terms of financial perspective, profit and loss basically shows the performance of the company, like how well the company is performing. If the revenue is increasing year on year, which indicates that the company is performing well. And at the same time, we also have to monitor the expenses in case if the spending on the expenses are excessive. We also have to see that what we are making additional to the which is not relevant. So we might want to cut down the expenses or to see where we can reduce the expenses to improve the profitability. So it's more of a performance related statement. Next, we have the balance sheet. In broader view, balance sheet basically shows the overall financial position of the company, like how many assets that the company have. And when we talk about the assets are divided into two categories: current assets, which are short-term assets, which are held in the company for less than 1 year, and then we have the other category, which is non-current asset, which is held in the company for more than 1 year. 1 year. So these are the total assets, and then we have liabilities. Again, liabilities are also divided into two categories: current liabilities, which are short-term liabilities less than 1 year, and then non-current liabilities, which are to be paid in more than 1 year time. So after that, we have equity, which shows basically how much is the share capital invested in the company. So all this basically represents the financial health of the company. So um, for example, if a company have more assets than its liabilities, it clearly indicates that the company is in a better financial situation because it has more assets than its liabilities. And in another case scenario, for example, if a company have more liabilities than its assets, then there will be more concern towards the company's going concern issues because the company may not be able to continue operating moving forward as a going concern. So yeah, these things are basically important when assessing the financial position of the company. So yeah, these two statements are the key statements when it comes to monitoring the performance of the company and ensuring that the company is in a good financial health overall. So yeah, and again, uh, these statements can only be prepared once the company maintains proper books of accounts, once the company keeps track of its all sales, expenses, bank transactions, all its liabilities. So that's when a company can reach to or a company can prepare these statements, which will show all the true and fair position of the company. Now, I'll talk about the importance of maintaining accurate financial records in Bahrain. So, first of all, for those companies which are registered for the VAT in Bahrain, it is the requirement for the National Bureau for Revenue to maintain proper books of accounts, which are not only mandatory for the VAT purposes, but as mentioned in the previous slide, also mandatory for the local company regulation in Bahrain. So yeah, in at any point in time, whenever the tax authorities ask for the supporting documents or the supporting books of accounts, if those are readily available, those can be provided immediately to avoid any non-compliance issues with the authorities. The second one is what we have is the meet with the Ministry of Industry and Commerce requirements for the audit reviews. For those companies who are required to have the annual audit done, annual audit can only be conducted once the bookkeeping is completed. So, for example, if a company do not, if the company have not maintained any books of accounts properly, then it would have to first prepare the books of accounts and then proceed with the audit. So technically, for the audit, definitely books of accounts and proper management accounts must be prepared to proceed with the audit. So one of the important requirement for the audit. Third, we have complying with the Bahrain's ESR regulations. So yeah, again, for the economic substance filing, we need the annual management accounts because based on the annual management accounts figures, economic substance returns can be filed. So yeah, it's very important for that. I explained earlier already about maintaining the accurate records for VAT claims and tax reporting because at any point in time, in case if there is any tax audit by the authorities, these documents would help to justify all those transactions which have been reported as a part of VAT returns that has been filed. Uh, Another one related to tax authorities again, which is to help avoiding fines. So if the proper books of accounts are being maintained, there is a less risk of any error. Everything will be maintained properly and there is a less risk of getting any fines from the tax authorities or from any other local authorities. Um, the next we have is, sorry. Okay, so clear report attracts investor by showing growth and performance. So as I explained in the previous slides that the profit and loss statement represent the performance of the company, whereas the balance sheet represents the financial health of the company. So if proper books of accounts are prepared, if proper management accounts are readily available, it would help the investor to understand. So in case if a company wants to attract potential investors for the investment in the business or maybe to sell the business, those books of accounts will be key to understand how the business is performing. Again, earning before interest, tax, and depreciation are the key for the buyers in assessing the profitability in the sales. So yeah, this would help investor to ascertain whether the business is growing or it is not doing well in terms of profitability. Um, and the last one is reliable statement can support loan approval and supply credit. So if the books are properly prepared, applying for the loan or getting the supply credit would be quite easier because we can show to the potential bank or to any supplier our books of accounts and it would be clear that how the business is performing. So getting a loan and a supply credit would be quite easier. Um, so these are basically the importance of the of maintaining the proper books of accounts. Now, let's talk about the risk that involves in case if the books of accounts are not properly being maintained. So VAT errors may cause penalties and loss deductions. Non-compliance with the audit laws risk fines. Poor records can lead to wrong reporting. Weak finances increase audit and legal risk. So all of these are mainly the risks which are associated if the books of accounts are not properly prepared. So some of them can immediately affect the entities. Some of them may not immediately affect the entities, but it may affect the entities in the longer run. For example, VAT errors, those errors may not be discovered at the time of filing of the quarterly VAT returns, but at the later stage, maybe after several years, if those were discovered, there are penalties to correct those errors. And in the other situation, if the tax authorities initiate the tax audit of the companies, at that point in time, basically the penalties and the consequences can be quite severe because the tax authorities would have identified the errors in the reports that has been submitted. So yeah, it's very important that these elements must be taken care of when maintaining books of accounts and then filing to the regulatory bodies. Okay, so next off, there are some tips for maintaining proper bookkeeping. So I've just listed them down for your reference. So first one we have is keeping personal and business accounts separate. Use dedicated bank accounts and credit cards to simplify taxes and maintain clarity. So technically, for a business, the bank account should be separate than that of the personal so that all the transactions which are related to personal owners or to anyone's personal expenses, that should not be considered as a business expense. So a separate account should be maintained for that, particularly when it comes to the company. The second one is very important, which is using the proper accounting software. So um, there are a lot of risk involved when maintaining the books of accounts manually in Excel or in any other form. So it is always recommended to maintain proper accounting software to manage the books of accounts, which will ensure the accuracy and also um, uh, uh, it will ensure that the work is not duplicated because there are a lot of things that in the software can be done automated, right? So you do not have to worry about doing the task manually again and again. So you just have to um, uh, automate it in the software. Also, when it comes to reporting, you can just generate all the reports in just one click rather than having to prepare them manually. So there are certain reports that can be pulled out automatically from the software. Set up record keeping, organize all the received invoices, expenses in a clear system to stay compliant and plan ahead. So again, um, uh, preparing the records in the proper accounting software will help all the receipts and invoices and expenses in a proper way so that everything is compliant. Um, Update and review financial records regularly to ensure correctness and support decision. It's very easy to update and review records when it is maintained in a proper accounting software. Um, Reconcile monthly match books with the bank statements each month to catch errors or unauthorized transactions. Very important steps when compared to the bookkeeping. So basically, all the bank transactions should be tracked and should be posted properly in the accounting software. So yeah, it is very important. Apply internal control, reduce fraud by separating duties, for example, check writing, reconciliation, and approvals. Um, so it is very important to ensure that proper internal controls are in place when it comes to preparing books of accounts. The reason because if one person has the authority to post the transaction and to authorize those transactions as well, there are chances of fraud and the funds theft of the funds. So it is very important to maintain proper segregation of duties so that the chances of fraud can be minimized, which means if you have a finance in your finance department, for example, you can segregate the duties by a person who is posting the entries should be a different one, and then the person who is authorizing it should be a different person, so that the transaction basically goes through multiple checks before it's finally gets posted into the accounts. The next off we have is the monitoring of the receivables and payables. So um, tracking incoming and outgoing payments closely help manage the cash flows effectively. So in case if these incomings and outgoings are not being managed properly, there are chances that the company can run out of cash. So to avoid those all situations, it would be helpful if these things are being tracked properly. Prepare monthly or quarterly reports to review the performance and guide strategy. So as a standard practice, it is important to prepare monthly, quarterly, or even weekly report in certain circumstances to ensure that the business is performing properly. In case if there are gaps in the performance, in case if something concerning, action could be taken at right away during the those months rather than just waiting after the several months to highlight all those things. And the last one is the important tip regarding hire professionally if needed. So, um, in the current environment where laws and regulations are changing rigorously, new regulations are being implemented, it is very important to seek professionals' advice, whether internally or maybe from an external provider, to ensure that your books of accounts are in compliant, your tax and audit are all in order. So it is very important to ensure and seek professional advice, so you do not face any hassle or troubles in the future for any kind of non-compliance or any kind of surprises. So I guess this would give you a bit of the understanding of how you can effectively monitor, maintain proper books of accounts. Now, the next slide we have is focusing on the budgeting. So earlier in the previous slides, we have discussed about the importance of maintaining proper books of accounts. Now, to maintain proper cash flows, to maintain or to track the business performance, it is also very important to budget or plan your activities accordingly. Now, for example, there are key areas that I will focus on in this slide. So first is ensure financial stability. So if you will budget the things properly, it will help business manage cash flow, ensure liquidity for day-to-day operations and long term. It will also provide a financial roadmap, allowing business to allocate resources efficiently towards achieving specific objectives. Um, it will also help you improve your decision making, because if you will plan your budget, uh, you will be able to monitor your budgets accordingly. And in case if there is any deviation to the budgets, you can simply monitor and then adjust your budget accordingly. So let's say you have prepared a budget for the next 12 months with the revenue of, let's say, 100,000 Bahraini dinar, and then the profit of, let's say, 50,000 per month. So uh, this is your budget, but when you will track your actual performance month on month, when you will compare it with your actual P&L, you will be able to understand a lot of things as compared to your budget, like where your sales trend is going, where your expenses trend is going. In case if you have to manage your sales in the budget, you can do the adjustment at that time. But yeah, the budget basically help you plan well in advance of your performance, and then it will help you target something that is achievable. So that's the reason it is very important. I'll focus more on the budgeting in the next slide. So yeah, okay. So yeah, so in this slide, basically, I would explain exactly where you would need help when building a solid budget. So for example, setting objectives. So clearly defining short-term and long-term financial goals. So basically, to build a solid budget, you should properly set your objectives, whether it is short-term and long-term. So that should be clearly defined. uh, then you should have a proper forecast of your revenue. Forecast could be based on external circumstances, or it could be based on your internal circumstances, right? So you should have a proper forecast. Um, Market research can be done to forecast the future expected sale in the following months. So this is also one of the important factors to consider, because this would be the base of your performance when preparing the budget. Then you will have to identify your expenses. So when it comes to fixed expenses, most of the companies would already know, for example, rent, salaries, and then company annual renewal expenses. So these are all the expenses which are pretty much fixed. There won't be much changes in it. So all these expenses can be embedded in the budget in the same way. But there are certain expenses which are of the variable nature and kind of ad hoc in nature. So you have to identify those expenses and then add the provisions in the budget for all those kind of variable expenses. And then the next off, you will have to assign funds to the critical areas of the business, ensuring proper balance between cost and goals. And in case if there are any ad hoc costs expected, you would have to just estimate it well in advance and then embed it in your budget. Um, and then once the budget is prepared, as I mentioned in the earlier slide, that you would have to continuously monitor that budget and then compare it with your actual reports on monthly basis to track the performance and to see whether your actual performance is up to the mark or it is deviating maybe from the budget that has been prepared. And at that point in time, basically, you will be in a position to ascertain that what is causing the deviation to the actual budget, right? Whether you are making less sales than your budget, whether your expenses are more than what you have budgeted. So you can plan well ahead at that time and then keep on monitoring and adjusting your budget according to the actual trends going forward. So that is basically these are basically the steps to make sure that the budget prepared is solid and then it basically covers all the possible fixed and variable costs in it. Moving on to the next slide, which covers the VAT. So basically, VAT is the consumer tax, which is levied on the sale of goods and services. So currently in Bahrain, the percentage that is applicable is 10%. It is applicable to the businesses who are making taxable supplies. And businesses with the annual taxable supplies exceeding Bahraini Dinar 37,500 must register for VAT. I'll quickly move on to the next slide, which will explain the VAT registration threshold. Yeah. So there are basically two thresholds in terms of revenue. So if the revenue of the company in any of the previous 12 months exceeds the lower threshold, which we call it as a voluntary registration threshold, which is in Bahraini dinar 18,750 and in USD it is 50,000 US dollar. So if the revenue of the company in any of its previous 12 months exceeds this threshold, then the company becomes eligible to apply for VAT registration in Bahrain. As the name specifies that it's a voluntary registration, which means even if the business do not want to register, that would be fine. There won't be any penalties for not registering. So the next threshold we have is the higher threshold, and the name suggests that it's the mandatory registration, which means if the revenue of the company in any of its previous 12 months exceeds 37,500 Bahraini dirham or 100,000 US dollars, then it becomes mandatory for the company to register for VAT. And in case if the company failed to register even after exceeding this threshold, there will be late registration penalties. Okay, so VAT registration basically happen at NPR portal where in case if the annual taxable supplies exceeds the threshold. So if a company which is now registered for VAT because it exceeds the revenue threshold, then it would have to change and then comply with the VAT regulation because um, VAT regulations basically applies to those companies who are registered for the VAT. So once the company is registered for VAT, that's the time the company would have to meet with all these requirements. So the company would have to issue VAT compliant sales invoices. So as a standard VAT compliant sales invoices, It should include the VAT registration number, the name of the company, the TRN number of the company, and the title of the invoice should be tax invoice. So all these conditions should be satisfied. Maintaining records. So again, as previously mentioned, in the importance of bookkeeping section, that for a VAT registered business, or they should maintain proper books of accounts and maintain proper tracking of all the transactions for at least previous 5 years. Authorities can ask anytime as a part of tax audit and inquire about all those documents. And then the other requirement is to file the VAT returns. So companies can file monthly VAT returns, or it can file quarterly VAT returns depending upon the business size. So for example, if the um, uh, if the turnover of the company, exceeds Bahraini dinar 3 million annually, the company would be required to file monthly VAT returns. Otherwise, the standard quarterly VAT return filing would be required for all the companies who have revenue below 3 million dirhams. Now, a little more detail about the VAT calculation and the payment process. So, technically, there are two types of VAT. One is output VAT, which is charged on the sales. So, for example, if you are a business who is issuing the sales invoices to the client, you will have to charge 5% VAT to your clients, to your local clients, right, to your local Bahrain clients, 10% VAT in Bahrain. So there is another VAT, which is input VAT. So if you're a business who is incurring expenses, so on the supply invoices from those suppliers which are registered in the Bahrain for the VAT, you would have paid 10% VAT. So technically, it's just a net off between output and input VAT. So you have collected 10% VAT from your customers, and then on the other side, you have paid 10% VAT to your suppliers. So at the end of the quarter, you will just net off these two amounts. And if you have collected more, which means you will have a liability to pay to the FTA. And in case if you have paid more, you will have a refundable position from the tax authorities, so you can claim back that refund from the tax authorities. So the payment deadline for the VAT is basically end of the month following the end of the quarter. So you would have probably 30 days to file your VAT return and then pay any tax liability which is due. And the last one that we have is reverse charge transaction. So that is basically apart from output and input VAT, as I explained that the output is applicable for the sales, input is applicable for the expenses. Reverse charge is basically applicable on all those cross-border transactions where the supplier is located outside of the UAE. So if you are purchasing something from a supplier which is located outside of the Bahrain, then that's the time you will treat this transaction as a reverse charge transaction. There are certain consequences for the non-compliance, for example, late registration. So if the company failed to register within 60 days of exceeding the threshold, there will be a penalty of 10,000 Bahraini dirham for that. And in case if a company who failed to file the VAT return within the deadline, there will be penalties ranging from 5% to 25% of the value of the tax amount. And then failure to issue the proper VAT invoice, the penalty would be Bahraini dinar 5,000. Now, I've listed down some of the zero rated and exempt supplies in Bahrain. So when it comes to issuing the sales invoices, either you can charge 10% VAT on that, or you can put just 0% VAT on it, depending upon the kind of the supply that you are making. So I've listed down some of the supplies which are treated as zero-rated supplies. So for example, basic food items, healthcare services, educational services, certified pearls and precious stones, oil, gas, products, construction services for new building, export of goods and services, local and international transportation. So all these services All these services are by law classified as zero-rated supplies. So which means if your business is dealing with any of these supplies, any of these services, then you don't require to charge VAT. Although you would be required to register for VAT whenever that threshold exceeds, but you won't be required to charge VAT to your client. The next we have the exempt supplies. So certain supplies are treated as exempt supplies as per the law. So these are totally exempt from the VAT, which means if your business is purely making exempt supplies, you do not have to even register for VAT. So that's basically all these, I mean, financial services, sale and lease of real estate, life insurance. So all these are basically the exempt supplies. Moving on to the next slide. Yeah, so some tips for staying compliant with the VAT. So file on time to avoid penalties. So in case if you are required to register, you have to register on time when the threshold exceeds immediately so that you can avoid fine. You have to pay your tax liabilities on time. You have to file tax returns on time. So these all the precautions will help you avoid any potential penalties in the future. Um, for the compliance requirement, for all the companies, maintaining proper books of accounts is mandatory. So yeah, this is also another thing that needs to be considered to stay compliant with the VAT regulations. Review and reconcile VAT ledgers. So as a VAT registered business, every company used to file quarterly or monthly VAT returns. So it is important to ensure and keep a track of all the VAT returns that you have in your books compared to what has been filed to the tax authorities so that both are matching at all the times. Because at any point in time, if in the future, if tax authorities comes up for the audit, we should be able to provide them with exactly the same record which has been filed during the previous years. And an important factor which is to consider is to use the VAT compliant software, which will help ensure that all your transactions are properly prepared and maintained. Now, couple of things that I would want to highlight regarding the audit. So for some of the companies in Bahrain, audit is a mandatory requirement. So what audit is basically, audit is an independent examination of the financial statement to ensure accuracy and compliance with the applicable laws and regulations. So basically the objective of this is to make sure that the performance when it comes to profit and loss statement and the financial health of the company when it comes to balance sheet, all of these statements shows true and fair position of the company. So there are two types of the audit. The one is the internal audit and the other one is the external audit. So internal audit is basically conducted by the company's own internal audit team. That is just for the stake of the internal management to make sure that everything is properly maintained. There are no errors, there are no frauds, nothing. And when it comes to external audit, these are performed by the external auditor. So there are several regulatory bodies in Bahrain that do requires the annual accounts of the companies to be audited by the independent auditor. So there are several penalties also associated with the non-compliance if the audited accounts are not prepared properly. So yeah, it is very important to comply with these requirements for those companies who are required by the law. Okay, so why the audit preparation is important? So first of all, it ensure compliance. It helps the business meets the legal requirements, avoid penalties. Audit is required basically for the following type of the companies. As I mentioned earlier, that for certain type of companies, audit is a mandatory requirement in Bahrain, which includes like joint stock companies, limited liability companies, foreign company branch. So these are all the kind of the companies where the audit is mandatory. So basically, it reduce the risk. It helps identify anything that might cause trouble in the future. So it's basically help to early identify all the potential issues or any risk that involves. So potential audit issues and solutions. So I just have listed down certain points which will help you to understand that how it is important. So basically, incomplete documentation. So ensure all the financial records are properly documented and accessible. Reconcile VAT tax filing with the financial statements to avoid issues. Identify and address any gaps in the internal controls to prevent audit findings. And then double check financial statement for errors or omissions before submission. So yeah, so these are basically all the steps that can be taken to proceed with the proper audit. Now, few tips for a smooth audit process. So be transparent about the documents. So whatever documents which are being requested by the auditors, it is very important to be transparent in them and then provide all the information to the auditors in good faith. Communicate regularly with the auditors. So it is key that the communication with the auditor is clear and it should be regular so that any ambiguities can be clarified timely. Respond quickly to the audit request. Again, very important because in certain for certain type of the company, there is a deadline to submit the audit report. So it is very important to respond to all the queries of the auditors on timely basis so that the audit can be completed within the deadline so that it can be filed to avoid any non-compliance fine from any of the regulatory bodies. Um, yeah, and then the last one is prepare your accounts team to assist. So whatever is your accounting team, whether it is your internal in-house finance team or maybe the external provider, you should be able to prepare your accounts team to assist with the proper audit, right? So they can support you in providing all the required documents, information or clarification which is required by the auditors. Yeah, so that's pretty much it from my end. So feel free to ask any questions that you guys have. I'll be more than happy to take that one by one and address.
Thank you, Amma. That was really useful. I don't think we have any questions yet, but guys, do feel free to ask any. I had a couple actually from some of the points that you raised throughout the session. Is there an amount of time that companies will need to hold on to or keep track record of? You know how in
Mhm,
some cases it's like the a tax authority, for example, might want to see records up to 10 years or something like that. Does same
mhm.
apply? Or how long would you recommend keeping records for?
Yeah, so ideally the records should be kept for minimum of the 5 years because that's the requirement as per the company, as per the VAT regulations as well. So if the records are maintained for the 5 years, so any point in time, if the tax authorities or any tax authorities ask, those 5 years records can be submitted. But if a company who do not have even 5 years record, they may have like 2 years or 3 years. That's where there could be troubles because the authorities might ask for the previous years also. So it is ideal to have at least 5 years of accounts.
Okay, great. And then you were obviously talking about how important it is to have good accounting software. Do you have any recommendations or advice as to where people can, or tools that you know are that are useful?
Yeah, so there are several accounting softwares. So the most common ones are Zoho Books, QuickBooks, and then Xero. So these three accounting softwares are more widely used all over the GCC. There are multiple, specific compliant. Like for example, they would have a Bahrain compliant version. They have a KSA compliant version. They have a UAE compliant version. So the idea is to select a software which is compliant specific to that country, which will support VAT reporting, and it will also help to ensure tracking of all these tax reports easily. So yeah, these softwares can be used. The best part is these are all online software. It can be accessed from anywhere in the world and at a time multiple users can access it. So in case if there is a owner who just want to have the access to the software in the sense that he just want to review the reports, performance of the business, navigate through the system. He can have
Mm.
his own user, and at the same time, the accountants can have their own user to actually just do the posting. So yeah, it's very useful.
And does it typically help you with kind of all functions within accounting, like invoicing, kind of managing books, all the kind of things that you'd need to do, even at a very basic level?
Exactly, exactly.
Okay.
So we can issue the invoices from the software. Even we can prepare our customized template with the company logo, with the address
Mm,
and all sort of thing. And then the invoices can be issued. And these are kind of a very advanced software. So it's not something that you have to do manually. You can
mm,
simply generate the invoice from the system, from the software, and then send it directly from the system itself to the client. And you
mm.
can also send the payment reminders automatically from the system itself. So it's a kind of software which will automate a lot of the things that might have been done manually in the past.
Okay. And then when you're planning for the financial year budget, if you know, for example, that there's certain periods where your variable expenses might go up, like for example, October to December is usually where you try to do, more events than usual. Would you
Mhm.
kind of put that excess amount into those months, or would you spread it evenly across the year?
Yeah, so it totally depends if the expenses are of the ad hoc nature and if those are not expected to be incurred again in the foreseeable future. But in case if we are expecting that those expenses or maybe a part of those expenses will be incurred again in the coming months, then we can include a tentative provision of that.
Okay, great. Sharanya was just asking, where's the best place to get some training for Zoho, QuickBooks, or ZeroBooks, those kind of tools that you mentioned.
Yeah. So on the Zoho Books website, there is a lot of training material available already. So anyone can search on the Google, and then they can see the interface of the Zoho and then basic like guidelines on how to use it. Other than that, there are certain videos also available on YouTube on how to navigate to Zoho Books accounting software. So those would be, I mean, those would give pretty much idea of how to navigate through the software.
Okay, great. And then last question is obviously you were talking about cash flow and obviously different expenses kind of coming up throughout the
Mhm.
year. Is there kind of a rule or a guideline or, a guideline as to how much cash a business should always kind of think to have access to? I know it obviously depends on the size of the company
Mhm.
and stuff like that. So even maybe as a percentage, like what should be in there so that you always have access to cash?
So again, I would rather say that it depends on the business. As per the regulation, there is no hard and fast requirement that for this particular type of the company, this much percentage of the cash should be held as a buffer. So it totally depends. So again, as I mentioned in my slides, while I was reviewing those slides, that the budget is important here because when you will budget and pre-plan those things, you will be able to figure out how much cash you need to run your cash flow smoothly, right? So it basically the assessment of your own business, like how many transactions you usually do. Because for most of the businesses, they also used to manage the transactions through banking channel, right? Rather than preferring to do it through cash, right? So it totally depends what is the policy of the company, what is the scale of the business that they are managing on cash, and based on that they can manage. And initially they may face issues, like let's say it's the start of the company and they have set up a budget for the cash that they want to keep as a buffer, but they ran out of cash maybe like 2 3 months. So they can reassess their valuation that they did at the first place and then add some margin on it to just reach to an optimal point, right? So it's
Mm.
a basically an ongoing effort, basically. So at first they would have to just put an estimated amount and then continuously monitoring it as they go, monitor their actual profitability situation. Yeah.
Yeah, I think that's good advice because a lot of the people on this call are part of the incubator. So obviously kind of new business or entrepreneurs,
Yeah.
SMEs type setup. So that's good advice. Okay, Amma, thank you so much for your time and thank you everybody for joining. We hope that you found it really informative. If you have any questions, you can obviously funnel them through Sovereign Business Hub team. Nora's there, and then Amma's obviously available as well for any other questions offline. Have a great day. Thank you so much.